Hi everyone, in this video I'm going to answer which stock is the better buy, Amazon versus Alphabet versus Apple, the three A's, the three big tech stocks. I'm going to look into four different metrics and compare these three stocks on those metrics, and then in the final metric, I'm going to look at the valuation and answer which stock is the better buy. So let's get right into it, starting with revenue growth. Amazon, Alphabet, and Apple here. And looking at revenue growth, you see initially Alphabet in the orange had the lead with better revenue growth, peaking out in 2014. And then Apple took the lead, and then Amazon took the lead and held it for the longest out of all of them, and then Apple came back and Alphabet took the lead, and it's really been a close race other than this time here when Amazon had the better growth rate for all of those years. And then now looking most recently, they've all seen their revenues decline as consumer spending patterns have changed. They're all struggling from this changing consumer behavior, choosing to spend their money on travel and restaurants and bars and things like that. Apple suffering the most here, negative 5.48% of revenue in its most recent quarter. Alphabet 0.96% in revenue growth, and Amazon 8.58% revenue growth. And going forward, Amazon expects to have better revenue growth over the next few quarters compared to the other two right now. So for now, Amazon again taking the lead in revenue growth. The next metric I wanted to look at is the operating profit margin for the trailing 12 months. And in this battle, we see Alphabet and Apple in a close competition, and then we see Amazon way below here. Here we have Alphabet and Apple earning robust operating margins above 20% for most of the last decade here, and ending at 29% for Apple, which is incredible, and 26.46% for Alphabet, which is also really good. Amazon here, very skinny operating margins, 2.38% most recently, never had an operating margin above 10%, although it was making very nice progress expanding its operating margin before ultimately the economic reopening brought back all of its progress it made during the pandemic and then some. Looking at operating profit margin, it's going to be really close with Alphabet and Apple. Apple's really catching a tailwind from the rise of its services business. It's got close to 1 billion subscriptions to its services, and those come with gross profit margins over 70%. So the more that people are spending money on Apple Music, Apple TV, all of that, that's giving rise to Apple's profit margin because its hardware margins are lower, like 34% when it sells an iPhone or AirPods or things like that. Alphabet, meanwhile, has got really strong underlying business fundamentals that deliver very good operating margins. And this has even been the case, even though it has been a little bit, I want to say, loose with its spending, hiring too many people, paying them too much, offering too many perks to its employees. Despite those and spending a lot on projects, literally they call them moonshots, trying to hit home runs. And if they were to be really tighten their belts and be really serious about controlling costs, I wouldn't be surprised if Alphabet could boost their operating margins above 30% consistently. But they're not. They're really taking a shot at these projects, and some of them may pay off. Like one of their projects is Waymo, the driverless car technology, and they're ahead of the game in that regard. They're some estimates suggest they're the leader in that industry. So these may pay off, but for now, with investors so focused on costs, Alphabet is getting a little bit of punishment for being a little bit too loose with their expenses. The next thing I wanted to look at is cash flow from operations to sales. How good is the company at turning $1 of sales into $1 of cash flow? And in this metric, Amazon reported 9.1% in cash flow to sales in the trailing 12 months. Alphabet, an incredible 32.35%, turning each dollar 32 cents of each dollar in sales is turning into cash flow for Alphabet, the best out of all of these three. Apple also doing a good job at 28.18%. So finally, I wanted to look at the stock's valuation, and I chose to use the forward price to earnings ratio. And looking at it this way, Amazon is the highest, trading at 66.65. The next one is Apple at 26.26, and the cheapest stock is Alphabet at 18.98. And so, what partly explains Alphabet's poorer valuation here is all of the negative news around how ChatGPT is going to hurt its search business, which is a significant contributor of the operating profits for Alphabet. Some of that, in my opinion, may be overblown. It's a little too early to say with any conviction how ChatGPT is going to impact Alphabet's search results. It's certainly going to make an impact, but I don't know if it's going to make such an impact that its valuation deserved to be so discounted after the market started digesting what ChatGPT can do. So for that reason, I'm going to say the best stock to buy out of these three right now is Alphabet. It's got the highest the highest cash flow of operations to trailing 12 month sales. Its business model, the underlying business model, in my opinion, is very good for profitability in the long run. And if it really needs to tighten its belt, it can actually improve its operating margins. And so for that reason, I'm going to say the best stock to buy here is Alphabet. All right, that's all I've got for this video. As always, thank you so much for watching. I really appreciate your viewership, and I hope you'll tune in next time for another video. Thank you for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.